Hello and welcome back together to this weekly update on the financial markets mid-week or beginning of the week. Sorry for the delay. I have not much time today, so I'm just going over the four main assets. So the S&P 500 index on the weekly, daily and 4-hour time frame, as well with US oil, very interesting right now, gold and Bitcoin against the US dollar. So that you know what to do in the markets the coming days and weeks. And on the weekend again, I will produce another video where I will also have time for my single stock watch list. Let's start directly in with the S&P 500 index on the weekly time frame. Here the S&P 500 on the weekly time frame is in an intact uptrend so far, but if we measure, let's move that there where it belongs. If you measure from the last significant low to the last significant high and the swing low here, then you got the Fibonacci retracement levels that have been holding beautifully well at the 0.5 combination with the prior all-time high level. So these levels are significant, and so the extensions level are as well. And we reached the first one. Now we are sideways consolidating, and it seems even like we would like to break down a bit. So maybe a little bit huger correction could be in front of the door, maybe to the last major high here. But let's drop down to the lower time frames for more details. On the daily time frame, you can see here that we had an intact uptrend line. Even that one was hard to draw in, was more like a curve here, the price movement. And it seems like we are getting to a tipping point here in the curve, where maybe the curve could go around and is not longer rising, but instead falling. If we zoom a little bit in, you can see that we had here a sideways consolidation where it was indecisive to break to the upper side or the downside. But now we have the first daily closes below this range. We got a strong counter trend movement yesterday on Monday. So first the market was crashing a bit down. Now it's recovering. We'll see what it will do today. But yeah, that are the first signs of a breakdown. And because of that, I was hedging with a small percentage my long-term holdings, because 50% of my capital is invested into the US stock market. So a little hedge against falling prices here, but nothing I did with my interactive brokers account. The 200-day moving average would be still support, but you can see here the both 50 moving average and 10-day moving average are compressing a bit. And if we even look one time frame lower to the 4-hour time frame, you can see that also here the 4-hour 200 moving average is now resistance together with the other two. So they are compressing. So price also was compressing, and now it has to resolve to one or another side. Still can be a fake out, but with the news in play and the geopolitical things going on, the likelihood of reversing here to the downside are higher than the break through to new all-time highs. Wouldn't speculate too much on falling prices here. Can be just a bigger sideways range, so maybe we fall only here to the last weekly low, and from there on bounce again. We don't have to see the full move lower to the 6,100, 6,200 level. It hasn't to be the case, but I would be at least prepared for the fact that we could fall this to the $6,500 or point level in the index. Yeah, that's I think the setup for S&P 500 index. So I'm hedging a bit against falling prices, but not actively betting on the profit from massively from falling prices. And if this will definitely be a fake out, that would be great, and we see a push above the last all-time highs, you see, then I would also resolve my hedge and close that one in a loss. Everything about that is extremely bullish and would speak for continuation. But yeah, be prepared for falling prices. The likelihood has risen significantly. So let's continue with US oil. US oil also starting out at a weekly time frame. You can see we had a red monthly downtrend line. That one got broken to the upper side, and afterwards we went into a weekly sideways consolidation or an A, B, C correction with a MACD divergence on the weekly basis here. I marked that one with a question mark. If that is possibly the low of this complete movement, I think we can now delete this question mark out. It was definitely the low, and like I was predicting or expecting in my last video report, we will see sooner or later here a breakout above this weekly downtrend line. That it would be that extreme, I wouldn't have known, to be honest with you. That would be too crazy to predict that. But yeah, we have seen a massive spike and a massive sell-off already in US oil. It was a little bit overdriven, in my opinion, here with $120 per barrel. And we see already the sell-off or profit taking, hedging, whatever. On the daily time frame, we can see my trade. Now it's a little bit off because we have so massive price spikes. But yeah, we had this daily downtrend. We changed from lower lows to lower highs to a higher low and higher highs. That was the moment I entered a long trade with a stop loss below the last swing low. And yeah, I also moved my stop loss higher after selling 50% of the position here after making my risk as profit. And I was telling you that I would like to let these profits run and move my stop loss accordingly. But after such an extreme volatility to the upside, I decided, okay, where's the next massive resistance zone? And I was spotting this here was a pullback, so support zone. Here was resistance for price. Here was massive resistance for price. So I decided to take my profits there once price was there. That was the case yesterday, and yeah, nearly even Friday. They sold 100%. At the moment, that was a good decision. Of course, we can come a little bit back and continue higher. Then more profit would have been possible, but I'm pretty happy with the 9.399 risk reward ratio here. Sadly, I wasn't taking that one in my interactive brokers because I'm not able to trade here futures with that account size, but a knockout certificate would have done that. Yeah, on the forward time frame, you can see this sell-off here because that was too extreme, driven by fear, and now prices come to a realistic level down. But yeah, of course, with this geopolitical things going on, everything can happen, and the price above $100 a little bit more long-lasting is possible or in the cards, but that would hit the economy badly, and probably stocks would start to fall more significant. At the moment, I think a lot of market participants are the opinion that this is temporary and not for the rest of the year the case that prices stay that elevated. Let's continue with gold. Gold spot against US dollar on a weekly time frame. We can see a parabolic move after leaving the $2,000 level behind with a nice breakout trade here. And since then we are printing higher highs followed by higher lows. The 10-week moving average is most of the time support here. We have seen a spike, then a huge spike to the downside. So massive overdriven to the upside and then also to the downside. And since then, price is continuing again slowly higher, staying above the 10-week moving average. So far, so bullish. On a daily time frame, you can see that the daily uptrend is still intact. Even the secondary daily uptrend is still intact with a small violation here below that. 50-day moving average is also support at the moment. The moment you can argue that gold is a bit sideways consolidating here, so we haven't seen a breakout to the upside yet, neither a decline, a really trend break. So at the moment a bit indecisive, What should profit from this are the miners. Because of that, I'm also invested in 1 or 2 of them, and yeah, they are earning a lot of money with these gold price levels. But at the moment I wouldn't trade it either to the upside or to the downside. If we have the 4-hour time frame, you can see, yeah, the moving averages are compressing a bit here on the lower time frame. That could mean that we see either a big move to the upside or to the downside. At the moment, with the geopolitical things going on and the overall uptrend that's intact, I would more likely bet on rising prices than on falling prices. The possible setup could maybe look here like this, above this swing high, stop loss below this swing low. Then yeah, first profit taking at the 1-to-1 risk reward ratio that would still be below the all-time high territory, and then value stop loss accordingly to price action. Yeah, not something I recommend, but you make, like, your decisions by yourself. Let's continue with Bitcoin. Yeah, Bitcoin against US dollar. We have seen from the 4-year cycle 3 years of bullish price action, and now what follows is the 1 year of bearish price action. We have a clear trend break and trending lower with lower lows and lower highs, but we're nearing the 200-week moving average. In the past, that was a good situation to buy long-term Bitcoin, so I'm keeping a close eye right now on that, in combination with this rising monthly uptrend and the 0.618 Fibonacci retracement level. A lot of things are aligning here at that level, so around the $60,000 level, $55,000 level, something in between. I think it's getting really interesting to load up again some Bitcoin, even if on the daily downtrend is still intact. At the moment we're seeing, I think, a counter trend move, maybe going up all the way to 78 or even 80,000. We will see. Testing here this resistance zone in combination with this downtrend, and from there on I would expect another breakdown, dipping slightly lower, taking a lot of market participants out with weak hands. From there on start rising again and really seeing the breakout again to the upper side, but that can still take a while, or maybe we will see a longer sideways consolidation at a lower level. We have seen that a couple of times in the past, and wait till the moving averages are aligning and compressing and then breaking out to the upper side. Yeah, short term on the daily, it's starting to look more positive. On the 4-hour time frame, you can see it more in detail. We had this downtrend that got broken to the upside, first retest back into the moving averages. They are all compressing right now, and now we're starting to go off higher again with the MACD cross. I am in a knockout certificate long position with the stop loss at roughly 64,000 at knockout level, speculating on a small push higher all the way up to this white solid daily downtrend line. I would sell these things again, because I think that the major downtrend is not finished yet. But short-term speculative, this could be interesting. Yeah, not that huge a risk reward ratio, but yeah, you can decide it for yourself. That's all I have for this weekly update here on the financial markets. Like I said, next weekend I will try to make a video where I have more time covering also my single stock positions. Till then, bye bye.